Welcome to Custom Home Builder Solutions, also known as CHS, a job costing, full accounting, and profit management software designed specifically for the professional home builder. Before we get started with setting up your accounting, and that's a series of videos I'm about to start to do, I'd like to talk about the fact that there are different methods of accounting that you can choose to use. And those methods have to do with when you recognize your income on your income statement. And this is something you really need to discuss with your accountant. There are things called the completed contract method, which means you don't recognize any income from the job until the job is closed. There's other percentage of completion methods, which is a complex one, but which is preferred. There's various other things, and I will be going through that in this video. Because you do need, when you start out and before you're doing your chart of accounts, to decide what method of accounting you're using. Again, this needs to be discussed with your CPA, the person preparing your tax return, because it has a lot to do with how you're reporting your income, either actually to your bankers or to the IRS. You may kind of use a hybrid of both, of a couple of the methods, which your accountant will know about. I'd also like to discuss the preferred method that most home builder consultants advise that you use as your method of accounting. So let's expand this chart of accounts departments, and I want to open the chart of accounts. And I open the chart of accounts, which is a list of all your accounts. You can consider them almost file folders for posting your records. And then having them show up on financial statements like balance sheets or income statements. And so the first part of a chart of accounts starts out with things like current assets, and then sections that we have cash, and we have receivables, and we have work in progress. We're going to come back to that, etc. And then there's fixed assets like your buildings, your cars, and your appreciation on that, your accumulated depreciation, not appreciation. Then you might have things you owe, like bills you've posted, accounts payable, payroll taxes payable, credit cards that you're running that are in a payable condition. We're going to come back to this construction liability section here in this discussion, and long-term liability, and then you have equity. And that all the way down to there through to the section called equity are accounts that will show up on a balance sheet. And on a balance sheet, it will then take the sum of all of the rest of the accounts following equity and include those on one line on the balance sheet to show that your books are in balance. All of these debits and credits, ins and out type things should total to zero in a double entry accounting system, which CHS is. But then you start in on accounts that are sales, and then cost of sales. And then you'll come down and have other income. Then you might have general and admin expenses going on, office rent or telephone. This is our demo job, and you won't see a lot of balances in a lot of these because it's not a real builder set of books. It's just things where we've demoed stuff. But anyway, all of those accounts are ones that would show up on what is called an income statement. And what I'd like to talk about is, based on the various method of accounting that you might use, what shows up on your income statement is dependent upon that method of accounting. So what I'd like to talk about for a second, let's do help. And I'd like to open a document under accounting methods that describes some different accounting methods that might be used by people in the construction industry. So let's open this methods of accounting document so that we can talk about it a bit. Recognizing profit from a job usually appears on an income, profit, and loss statement when revenues received are posted to a sales account, and when costs of the job are posted to a cost of sales account. Deciding when these revenues and costs are actually posted to those types of account depends on your method of accounting. And I just have a little note: recognizing profits has nothing to do with transferring money within your company from one place to another, which I've seen people do. And also to remember that this is your set of books, not your customers. You don't start trying to post things as if it was your customer's set of books. And CHS does not control when profit is recognized. In other words, when you post things to sales and cost of sales. It's very flexible. And there are tools available in CHS to help you recognize profit based on your method of accounting. I already talked about how a balance sheet displays your assets and liabilities and your equity, and an income statement generally is your sales less cost of sales less overhead expenses, coming up with what your net income is. The first method that is discussed here is a cash method. This for custom home builders, especially, or home builders, this method is usually the least favored. Using a cash method means that when you receive money, basically you post it straight to sales right away. So say you're a custom home builder and you receive a $50,000 down payment, and boom, you put that into sales, but that month you don't even have any costs yet because you've just gotten that. That means that suddenly that month's income statement could show that you made $50,000 as your net income, which is actually not right. That $50,000 you received could be owed back if you don't start the job, if you stop the job somewhere as you go, etc. But you might use the cash method. Let's just say you have some rental properties for some reason, you're collecting rents. So you probably just put those rents straight to something under the sales section called rental revenues. And if you have expenses like utilities or repairs, etc., for those rental properties, you'd be putting them straight to expenses on your income statement or cost of sales for that rental property, etc. So that makes sense. For a custom home builder, the cash method does not make sense to use it, and we're going to talk about what other methods are used actually by custom home builders. The other thing I should mention is sometimes remodelers, they might be doing, it has to do with if you're doing like a short job. So you're going to remodel something within 1 or 2 months, you get some money for it, you might be putting that straight to sales and any cost straight to cost of sales for those remodeling. But building a home usually extends over a lengthy period of months, and if you just put, like I said, that upfront deposit of $50,000, or conversely, if you just spent $5,000 for some reason getting plans or whatever it is, that would show you having a loss, which you really don't have either if you put that straight into cost of sales. So what I see the largest percent of home builders using is something called a completed contract method, which actually means that none of the monies received or the money spent for the job end up on your income statement until you close the job. What happens with this, and what the problem with that could be, is that when you have all of it show up on your income statement after you've closed it, it just suddenly means all of a sudden you come along in 1 month and you've made, $200,000 net profit that month, but nothing has been recognized that you've earned it as you've come up to that point. When you use that method, you're posting everything that you receive usually to some construction liability accounts on your balance sheet, like contract deposits, interim draws, etc., from either the homeowner or the banker, going to construction loans payable, change order money, and they're all in something called construction liability section on your balance sheet, actually. And also your job costs incurred. If you're using something like the NHB recommended chart of accounts, you're probably posting those to a work in progress account like direct construction costs and accumulating all those costs on your balance sheet. This part of it makes sense if you're doing a spec home that's going to be inventory, and you're not really earning any income on that until it is sold and closed. So a spec home actually fits better with this completed contract. But if you're doing a sold home and you're putting all of them here, which I will recommend actually to do in the first place, but we're going to come to the next method, which has to do with deciding each month, calculating each month how much you've actually earned as you progress through the construction, and then actually posting how much you've earned over to your income statement each month, which then gives you better comparison month to month to month what you've actually earned on a job. And we're going to talk about how you can do that in CHS. But you certainly can use CHS to do the completed contract method and just recognize revenues when the job is closed. Advisors will argue that it does not give a true picture of the profitability of your company, which is what I was just talking about. In the month the job closes, the entire profit is recognized, and during the preceding months, no profit is recognized from the job. This does not give you a true picture of profitability because it does not show you are earning profit as the job progresses. If you'd like to recognize the profit that your company is earning as you go, see the percentage of completion methods described below. The percentage of completion method recognizes gross profit, revenues less costs throughout the life of each contract, based on a periodic measurement of progress. This method is preferred by many consultants because it more accurately matches costs with revenues and therefore profit for a given period. If you use the percentage of completion method, you will periodically, usually at the end of each month, calculate how much revenue you have earned based upon the total of costs that have been incurred for the job. This method requires that the contract price has been properly determined, that a budget for estimating the job costs has been prepared, and that the job costs have been posted as they are incurred. You must determine to use this method how much revenue has been earned each month, basically. Revenue earned will probably not be the same as revenues received. It's calculated by first figuring out the percentage that the job is complete, and that usually is determined by dividing the total cost to date by what your current total estimated cost for the job completely is. You come up with a percent. Then you take your contract price and apply that percent to it. So if the contract price is $500,000 and you're estimating your cost to be $400,000, that means a profit of $100,000 basically. But if $100,000 of costs have been posted, you would divide that by your total estimated cost to say that this job is 25% complete. You multiply that contract price by 25% to determine that the revenue you've earned on the job based on the costs you've posted and incurred is actually $125,000. Now you may have or may not have received that amount, but it's the amount you've earned. And that's, in this method, what you decide to go and recognize. They call it recognizing when you get revenue or cost posted over to your income statement. You're actually recognizing that as income less costs actually to your net income. And then when you finish that job, you do your final closing entry, you clear out any remaining balances on your balance sheet, and those go to sales and cost of sales, and it'd just be the ending amount. Now what I'm going to do is take a look at our chart of accounts, but let's look at one other document that we have here real quickly. I won't go into every bit of everything that I have on here, but there's a little chart here that I'd like to take a look at that kind of makes the point about these different costs. Here's a column for cash method. Basic accrual means you're accruing stuff like posting bills, even whether they're paid or not paid, or you might do some sort of billing and you post it, to accounts receivable, but you haven't received the money yet, really. So let's pretend that we have that contract for $500,000. We're estimating our cost to be $400,000. And for some reason we prepared some bill to the customer for $50,000. And on the accrual method we posted that. And the only cash we paid out is $5,000. And we also have received an unpaid one that we haven't paid a bill for $15,000. So all that's happened so far under the cash method is we haven't received any money, but we paid out $5,000. And so we would be showing a loss of $5,000. That's kind of weird, and because you posted this straight to sales and cost of sales, you really haven't lost $5,000. You're just starting a job, etc. But that's how that would show up. basic accrual, you bill $50,000, but you haven't received the money. You've incurred costs of $20,000, $5,000 of which you've paid is all. And it's showing that you made $30,000, but you haven't really received that $50,000 yet. On completed contract in this example, all of it is sitting over in a liability or in direct construction costs, work in progress, so nothing is being recognized on your income statement yet until you completely finish the job. On percentage of completion, like we said, we've calculated that we've earned $25,000 based on $20,000 we've incurred in costs divided by the $400,000. Estimated cost is 5% complete. You multiply the percent complete times the contract and come up with that I've earned $25,000. And then you also have your costs that you've incurred, and those get moved on a percentage of completion. At the end of each month, you might move the costs over, and you make a journal entry that recognizes this, and it shows that in that month you've basically earned a net of $5,000, which makes way more sense for analyzing where you're at, what you've earned, etc. each month. To quote Steve Maltzman, who was a consultant to many Builder 20 clubs before his death actually, the percentage of completion method gives the best picture but is still only an estimate. It requires that the contract and total costs are properly estimated and that the job cost and cost system is accurate, up to date, and easily compared to the cost estimate, and this is where CHS comes in real strong for you. And the builder must have the ability to easily produce the information necessary to make a reasonable estimate as to the profit of the job. Now, CHS has complete tools to do this calculation for you for percentage of completion and have you click a button and create the journal entry that's required for percentage of completion. So I really wanted to go over that so that you can make some decisions. One of the decisions is you might load the recommended NAHB chart of accounts, and your decision might be that you are on completed contract, which this set of books is right now. But we're actually in the next videos going to be doing some percentage of completion entries to see how we move out of being in that completed contract. Let's go down here to the construction liability section on this builder's chart of accounts. Right now, because this builder is starting out or operating as if they're on a completed contract method, all monies they've received for jobs from either the down payment, contract deposits, which are down payments, or interim draws they've been receiving, is sitting in construction liability. And one of the reasons for doing that is that if the job fails, you might owe some money back. It's considered a liability, especially the down payments that you receive until you start the job. So it's not recognized in the completed contract as sales. Now again, like what I'm going to talk about is that we might recognize some of this, and that's what this account is for, job income recognized, and you'll see more about that when we start percentage of completion doing it. But in this case, none of this money has been moved to this builder's sales and cost of sales accounts. Also, back up here under work in progress, we are accumulating all of our job costs for the jobs that we have going on in something called work in progress, and none of that is currently showing up. Any of that stuff is currently showing up on our income statement accounts. We have posted some, because we do have some rental properties, directly to rental income and some to sales remodeling in 2015, I think, and posted some things directly, but none of our, you see we have sales, single family homes, none of what's going on right now is showing up there. A little bit is in our cost of sales just because we needed to post something for an old closed job all of a sudden. So I wanted to point out that in general, like I said, most builders are using that completed contract. Then when the job closes, CHS has full videos and tutorials about how you're posting that job closing and all of the amount for a job. The sales price moves to your sales, and all your construction cost moves to cost of sales, and then suddenly in that month you recognize all the income from one job that is just closed. Again, percentage of completion is actually much more informative. Notice right now I went to financials that if we do a little income statement for the year 2016, which right now I'm sitting in June of 2016, and we do an income statement for this builder, even though we've been building a couple of custom homes as we go, it's only showing rental income and a little bit of cost of sales from an old job and a little bit of rental expenses, and various income and various expenses, but nothing about what's going on with our homes. Now, if we had closed some job all of a sudden during 2016, we'd suddenly have a big amount in sales and a big amount in cost of sales that would have showed up in 1 month. So hopefully that's a little bit where you understand about the fact that there are different methods. The fact that there's a written help document explaining it could probably help you, that we looked at, and that you need to make a little bit of decisions about how you're going to be doing that. And most importantly, you need to discuss this with your accounting advisor or the strong accountant on staff, controller, etc. As you set up CHS, you need to make some decisions about where you'll be posting things. Will you be posting all of your job costs to work in progress, which you, by the way, you would do if you're doing percentage of completion, and then you'd move them to cost of sales as you figure out how much you've earned and move that to sales. And will you be posting all your monies received on a home you're building to construction liability, or would you for some reason be posting it all to sales? You know, like I said, your down payment because you're on cash, which actually isn't recommended for building homes. So hopefully that made some sense and will help you as we sort of head into demonstrating actually how CHS is a powerful tool for helping you figure out the monies you've earned and using the percentage of completion method that is the most highly recommended for custom home builders to be able to analyze where they're at. And CHS gives you the tools for that. Thank you for watching.